Guys, welcome back to my YouTube channel. My name is Bessie Manyori. If you're new here, welcome. If you're not new here, still welcome. This is a channel where we learn about budgeting, saving, investing, money market funds, treasury bonds, ETFs, and everything to do with being an international student in Australia. So if those are things that you like listening to, don't forget to subscribe, comment, share, hit the notification button so you don't miss another episode. So as you can see from the thumbnail, of course today we'll be talking about a very interesting topics among most of the Kenyans, and it's about special funds, and today I'll be focusing mostly on Mansa X. So maybe among your goals this year has been to finally start investing in Mansa X or any special fund, but you're not quite sure where to start. And let's be honest, in this channel, we always talk about not investing in something that you don't understand. You need to always read the blueprint. You need to always read the terms and conditions before putting any shilling into any asset. So I also know that most of us don't always have the time to go through hundreds of pages of financial jargon. That's why I did the job for you. So in this video, I'll be breaking down special funds, what they are, how they work, the risks, the returns, and exactly what you need to get started. So if special funds, especially maybe Mansa X or Oak Fund, has been on your radar, stay tuned to the very end because this could be the missing link in your investment strategy. Before we dive in, I'm giving you just a second, 2 seconds to subscribe so that you don't miss any of my financial deep dives. So the least you can do, guys, to push this channel to more people who need this content is to subscribe. So what are special funds? So special funds are called special for a reason. Unlike money market funds, which invest in short-term, low-risk securities, special funds are multi-asset funds. Special funds usually invest in like 200 asset classes, and they invest across different markets, different asset classes, and they create a unique blend of growth and income. So among the things that special funds invest in include currencies like euro, Japanese yen, US dollar, commodities, government securities, precious metals, ETFs, which are exchange traded funds, derivatives, and also the NSE stocks in Kenya. There are over, I think, 50. There is more than 50 special funds in Kenya. But the famous ones are Mansa X and Oak Fund, and today's spotlight, of course, is Mansa X. Mansa X is offered by the Standard Investment Bank, SIB, which has been a leading investment firm and is regulated by the Capital Markets Authority. I know some of us are usually so worried about the security, like, is my money safe? Am I protected as an investor? But if you notice, most money market funds, special funds, things like treasury bonds, they're usually regulated by the Capital Markets Authority. And for Mansa X, it is managing a whopping 65 billion Kenyan shillings, and it is also third in performance compared to CIC and Sanlam Money Market Fund. So also its headquarters are in Nairobi if you need to go and inquire about it, because of course, like we said, we shouldn't invest in something we don't understand. A disclaimer I would like to talk about is Mansa X is not an asset class for someone who is looking to save some pocket change. Like, you have some small money you want to save, it's not for you. Mansa X is for more seasoned investors. Mansa X is for people who are ready to take on a higher investment risk. And we also know that the higher the risk, the higher the return. The low the risk, the low the return. So Mansa X is quite high in return, so that's why it's higher in risk. The minimum investment you need for Mansa X is $2,500 or 250,000 Kenyan shillings, and then you can top up using $1,000 or 100,000 Kenyan shillings. But it doesn't have to be monthly. You can top up any time that you want. So before you panic, don't let this discourage you. Of course, I said it's not for someone who's looking to save some pocket change. This is something that is for like higher end investors. If you're an international student, this is something you can look into, because I know most of you are tired of hearing about money market funds because sometimes the returns are quite low. But if you invest in something like Mansa X or Oak Fund, it's going to give you higher returns compared to money market funds. If you don't have the whole 25 $100 to start investing. You can save in a money market fund, and then when you're done like accumulating the capital, then you can go invest in Mansa X, and then you start topping up with 100k anytime that you feel you're okay. The reason why I'm saying it's not for beginner investors is because it's a very high risk investment. And of course, if you're a beginner investor, you're like, oh my god, I don't want to try, I don't want to start with high risk. Can I start with low risk investments? And I always say that you need to handle the basics before you go to the complex stuff. So do you have an emergency fund? If an emergency comes that needs you to spend like 50k or 100k shillings, can you manage it without panicking? Do you have passive income? Do you have protection? Protection can be provided using things like treasury bonds, because they give you monthly passive income, especially if you ladder them. So you need to handle the basics first. Start investing in money market funds. For an emergency fund, start investing in treasury bonds. And then when you have this protective layer, you're able to take a higher risk. I know you understand what I mean, because there's no way you're gonna start with Mansa X and you've never invested in a money market fund. You've never invested in a treasury bond, so you don't even know how it feels like to have your money away. So guys, you need to handle the basics before you go to the complex stuff, and before you put your money in a higher risk investment, because of course you need protection, and you also need to sleep well at night. So when you have the protective layers, that's why you feel more confident to take higher risks. What you should know about Mansa X, basically it's designed for investors who have a medium to long-term mindset. In this channel, we talk about having a long-term mindset. There's no get rich quick scheme. It's not a get rich quick scheme. When you start investing, it can feel quite discouraging, because what do you mean I need to put away money for like 20 years so that I can have financial freedom? But you need to have a long-term mindset. If you have a short-term mindset, you'll be hearing that the markets are low and now you want to withdraw your money. You hear that the stocks are low, now you want to sell. But when you have a long-term mindset, you understand that these are normal things in investing. During investing, these are normal things. Market highs and market lows are normal as an investor. So you need to keep that in mind to prevent you from taking away your money every time something goes down. You are able to have a long-term mindset because you know that these are normal things, and we just keep our money there. It will still earn either way. Even if it will be a low interest, it will still earn. So it's advisable to lock in your money with Mansa X for at least 6 months to start seeing the real benefits. Most of us want to put money in today, and by next month we want to be a millionaire. There's no way that happens. The only way that you can become a millionaire overnight is to like win a lottery or sell your company, and I'm sure most of us don't even have companies worth selling. So guys, just adopt a long-term mindset when you are an investor. Mansa X is also a good option if you're saving for a more expensive goal. If you're looking into saving for maybe a car or a house down payment, you can use Mansa X, and you can also use it to build long-term wealth. The best part about this fund, it delivers an average interest rate of 18% per year, and the interest is usually compounded quarterly. They usually pay the interest every 3 months, so obviously it usually compounds. And 18% is quite good, because most money market funds usually offer between 8 to like 16%. Treasury bonds usually offer between like 10 to 15%. So Mansa X is really good because it offers 18. There's people who I heard that they were getting even 20%. The only catch with that is that it usually charges a 5% management fee, and when you compare to like money market funds, which charge like 2 to 3% management fee, special funds have a higher management fee because they have a higher return and they have a higher risk. Obviously, if you put your money in a special fund, you will earn higher. For example, if you had invested 1 million Kenyan shillings in 2019, by March 2025 you'd have had about 2.9 million, and that's significantly higher than any money market fund or treasury bill that you had for the same period. So I know as an investor we should always look into lowering the fees that we are paying. So you might be asking yourself, why choose Mansa X if it's costing 5% and other money market funds are charging like 2%? So this is why investors choose it. There's diversification. Like we say, this fund invests over 200 asset classes, and it rarely places all its money in a single risky asset. So you might find like money market funds put their money in treasury bonds, commercial papers, and maybe real estate, and maybe stocks. So that's a risky investment. But for special funds like Mansa X, it puts its money in like over 200 asset classes. So as an investor, we always talk about diversification. Like, guys, this is the only way to make sure you're protected. This is the only way to make sure your money is not going into one asset class that is so risky. So in case you get wiped out, you're not getting wiped out completely. It also offers capital preservation. It focuses on protecting the investor's capital because, of course, no company wants to incur losses. So if there's a risky investment that they made, they try to mitigate the risks. It also has returns above market. Historically, it has outperformed traditional banks, traditional money market funds, and traditional government securities. That's why seasoned investors prefer it, because it has returns above market. The other thing that it offers is liquidity. Most special funds don't really focus on investing in things like real estate, because as we know, before you liquidify real estate, it takes a whole lot of time. But if it invests in like things like derivatives, NSE stocks, government stocks, you can always sell your bonds in the secondary market. You can always sell your NSE stocks. If you feel like maybe it's getting risky, they can always cash out. So liquidity is important. And even you as an investor, if you want to go and withdraw your money, you can always go and withdraw. But like we said, it's good to lock your money for at least 6 months so that you can feel the benefits, you know. The other thing is quarterly income flow. Like we said, returns are paid quarterly, and quarterly is every 3 months, and it usually compounds over time. Let's say you invested in January, your first return will be in March, then the next interest will be calculated from the total that you got in March. Then you'll get another return in March, April, May, June, maybe June, July, then the other return you get in December. So it usually has quarterly income flow. It also has international exposure. Maybe you're bored of money market funds, you're bored of hearing about money market funds, you're bored of hearing about treasury bonds, and you want international market exposure. They invest in ETFs, they invest in precious metals like gold. So it's obviously, and also they invest in foreign currencies, euro, yen, and USD. So it obviously gives you an exposure because it's not limited to the Kenyan market. All these usually creates an opportunity for capital appreciation, and this is the kind of investment that can allow you to even retire early. If your goal is to retire early, maybe you need to consider investing in special funds because they have a higher return compared to any other investments, except maybe business. Yeah. So I know the most common question among us investors is usually, is my money safe, or will I get wiped out if I invest in this? Will my money be safe? Here is the good news. Mansa X is regulated by the Capital Markets Authority, CMA, which is the body that regulates all financial institutions in Kenya. It regulates money market funds, government securities, unit trusts, and all those. So there's trustee oversight over the fund manager, who is the Standard Investment Bank, and I&M Bank serves as the custodian, and the custodian is the ones who holds the investors' money. So yes, Standard Investment Bank is managing our money, but I&M Bank is the one holding our money. So there is never just one person just holding our money. So if one person misbehaves, there's people to hold them accountable. There's also a dedicated research and risk team who actively manages risk and monitors trades. If they feel like the trade is too risky, they're like, no, let's get out before we lose our investors' money. Investors also receive quarterly updates and also business confirmations every time they invest their money or every time they credit their account. These layers of oversight are designed to protect you as an investor while allowing fund managers to actively trade and generate returns. So basically what you need to invest in Mansa X is just a minimum amount investment of $2,500, 250,000 Kenyan shillings, while for Oak Fund you need initial capital of 500,000 Kenyan shillings and a monthly top-up of 50,000 Kenyan shillings. So you also need basic KYC documents, your ID or passport, your KRA PIN, your address, and your bank details where they will be crediting the returns. And you also need a long-term mindset. This is not a quick flip. This is not a get-rich-quick scheme. This is the place where you place your money and you're like, okay, let me keep it for a year, 2 years, 3 years. You see the returns, you get encouraged, and you're like, oh, I can actually do this for the long haul. You can actually decide to invest more of your money here. But I always say, don't invest all your money here. Don't invest all your money in one asset because it's risky. You need to diversify. You need to have treasury bonds. You need to have an emergency fund. You need to have money market funds. You need to have special funds. You need to have business. You need to have real estate investment trust. Just diversify your portfolio to make sure that all your eggs are not in one basket. Okay, so special funds are not for everyone. They require patience, strategy, and willingness to take calculated risks. You need to understand what your risk appetite is. If you're just a beginner investor, probably your risk appetite is low. If you have been investing for a long time, maybe your risk appetite is high. So you need financial foundation, and if you're looking to diversify beyond traditional savings or money market funds, this could be an investment that accelerates your path to financial independence. If you found this video helpful, don't forget to subscribe, comment, share, forward it to someone who's been curious to understand about special funds, to understand about Mansa X, to understand about Oak Fund. So your money should work hard as you do. So let's get the confusion out of your money and let's build wealth together. Don't forget to subscribe, comment, share, and I'll see you on the next video. Bye.